At 92 years old, Warren Buffett is one of the oldest, but also one of the most admired stock market investors in history. And while he's still around, I do consider it a privilege to be able to look at all the stocks that he thinks are either buys or sells. Even if I disagree with any of his decisions, it's still one of my favorite things to do, to evaluate his portfolio and the different moves that he makes in the stock market, of course, through his investment firm, Berkshire Hathaway, which is one of the largest hedge funds in the world. Well, it just so happens that they just released their last quarterly numbers on the different stocks that they're buying or selling. And so in today's video, we're going to take a look at two stocks that Buffett is buying and two stocks that he's selling. And in typical All Is World fashion, I'm going to give you my personal opinion on each one of those, and I'll even rank them from best to worst based on my own opinion. Even the buys and the sells, I'm going to combine them, and I'm going to rank them from best to worst, regardless if they were a purchase or a sale. So it's going to be a fun one, guys. I hope you enjoy the video, but let's just go ahead and dive straight into it. All right, now let's actually start here with the stocks that he sold first, and then we'll cover the buys right after. But in a bit of a shocking move here, Buffett actually sold almost entirely out of one of his newest investments in the giant computer chips maker, Taiwan Semiconductor, ticker symbol TSM, which he had invested very heavily in the quarter prior, but has now sold over 86% of that position off. It is, however, still a fairly large position regardless, at over $500 million, just because Buffett's portfolio is just so massively large to begin with. But it's still a bit of a surprising move here to sell so much, especially since the stock was already down so heavily, but then proceeded to climb by almost 20% this year right after he sold it. So it's looking like a pretty big mistake here by them, to sell out of it, and then the stock kind of took off. And to be honest, I'm actually a fan of this stock myself too. I actually used to own it back in the day before cashing in some big profits on it. And even though my semiconductor exposure is pretty high in other companies at the moment, I still think that it's a solid long-term option for most investors, because from the top, TSM is currently down about 40% in what has been a broad crash in the semiconductor industry coming off of the pandemic, where computers and chips are used a lot less, not to mention the lingering supply chain issues that have plagued the market as well, and some other issues here and there that continue to affect it. But that fall has left their valuation now almost 50% cheaper than the sector at a PEG ratio well below 1, which is considered a fantastic value, especially in tech stocks that tend to be much more highly valued than others. On top of that, TSM also pays a great dividend of 2% that tends to be a little rocky at times, but mostly trends upwards and has actually experienced some pretty high growth rates in most years. And looking forward, not only have their 5 nanometer and now 3 nanometer technologies position them well ahead of most other chip makers in the world as an industry leading foundry here that is really trusted by some of the biggest tech giants in the world to build chips for them, like Apple and Nvidia, but they're even benefiting from the new CHIPS Act here in America, since they're building a second giant manufacturing plant in Arizona, thus helping them diversify away from only building in Taiwan. In fact, they're even building another plant in Germany for the European market as well. And even though the chips market is down right now, we all know that the future of computer chips is very bright, given that demand will only go up for some of the highest growth markets out there, like cloud computing, artificial intelligence, gaming, smartphones, the Internet of Things, smart vehicles, and a lot more. And that's why TSM's financials have actually been on fire through the years. I mean, when you look at how much the stock price is down and how cheap the valuation is, you would think that TSM's business has been crashing into the ground, but that couldn't be further from the truth. In fact, sales have actually risen by huge rates of 33% in 2020, 20% in 2021, 33% again last year. And then coming off of all of that explosive growth, this year, they're just barely taking a small break of -1%, kind of correcting down a little bit before skyrocketing once again by over 20% growth the year after. And that's crazy growth overall, guys. And it's not just their sales. In fact, even their profits by EPS have soared by an average of over 20% in both the previous 5 years as well as the next 5 years expected as well. Without judging what else is on this list, I'm going to put TSM at the number one ranking spot for now, and that's despite Buffett actually selling this stock, which again, I strongly disagree with him on that move, especially if we're judging this from a long-term perspective. Moving on to the second stock, though, that Buffett sold last quarter, well, that's actually going to be yet another sale here that I was not really expecting, with the gaming giant Activision Blizzard, ticker symbol ATVI, at a 12% decrease in shares, which is the second quarter in a row that Buffett has lowered his position on it by a little bit. Now, I need to clarify here that while I was not expecting the sale, it does actually make some sense, because what you have to understand is that Buffett had already made this into a very large holding in the portfolio at over $4 billion, which is mostly just a bet on the acquisition by Microsoft getting approved for $95 a share, which at its current price of around $78, that would leave upside on the stock of over 20%. However, the deal has been getting a ton of scrutiny by regulators ever since it was announced, so cutting back on the investment a little bit here just to lower the risk a bit seems totally reasonable to me. I would never judge anyone for selling a little stock in order to lower your risk. That's a decision that everyone needs to make for themselves based on their own risk tolerance. But as far as my personal opinion goes on it, I actually own a very small position in Activision myself because I do feel that the deal will get approved. However, it's only about half of 1% of my entire portfolio, so I have very little risk on it, but I just feel that a small speculative amount is worth betting on. First of all, Microsoft continues to offer remedies and concessions to regulators, like keeping the popular Activision game Call of Duty on other platforms like Sony's PlayStation for many years into the future in order to not gain an immediate competitive advantage and act too much like a monopoly. And because Microsoft has already invested so much time and energy and of course money into the acquisition, I just really doubt that they'll let it fall apart, and most analysts seem to agree, usually stating that the deal is likely to be approved later this year. But even if the deal gets denied and Activision stock crashes, the stock I'd be left with isn't the most horrible thing in the world if I'm really thinking long term. First of all, Activision was actually trading higher than the proposed $95 acquisition back in 2021, where it was trading for almost $105 a share before the deal was ever announced. So there's at least some evidence here that they could reach those levels once again in the future. Plus, they also have a ton of strong brands and gaming IPs, including Call of Duty, Overwatch, Warcraft, Diablo, Hearthstone, and even a strong presence in mobile gaming as well with King Digital, who makes Candy Crush Saga. And while financials have been rough lately with very little growth, they do at least reach new record highs in most years. The valuation, however, is not very attractive at today's price, currently trading around 30% more expensive than the sector on a forward P basis. So I wouldn't really want to be buying it at these levels, but I do still think that it's a good short-term spec play on the acquisition, which could be one of the easiest 20% gains that we see this year at a time when the rest of the market is very choppy and unpredictable. Plus, there's always the chance that they get acquired in the future, even if the deal falls through, since we know that gaming giants like Microsoft and Sony see so much value in this company. But longer term, I still think that TSM overall is the much higher quality, safer investment. So I'm still keeping TSM at number one and ranking Activision below it at number two. Okay, we've now talked about the stocks that Buffett is selling, but what about the two stocks that he's buying? Well, one of the stocks he's buying here is actually the media and video streaming giant Paramount Global, ticker symbol PARA, which was only a small increase of less than 3% in the quarter, but it's a stock that Buffett bought a huge amount of a few quarters ago and has been slowly turning it into a bigger position over time, already worth over $1.5 billion. And this is interesting to see because Paramount stock has actually been falling quite heavily during that time, from a high of over $100 a share when they first announced a new video streaming service called Paramount Plus, now down to less than $20 today, which is a massive crash of over 80%. So, Buffett might be feeling like he's buying into the fear here. And yet, despite that huge crash, Paramount has actually done a pretty good job of transitioning over to streaming. First of all, the streaming market is growing at a very large rate of about 20% per year, and Paramount Plus only makes up less than 5% of that market so far, meaning that there's still a lot of room for them to grow. which is what we've mostly been seeing as they added a record 10 million new subs last quarter, bringing their total up to 77 million subscribers for the year, thanks in large part to recent hits like Top Gun Maverick, Sylvester Stallone's Tulsa King, Yellowstone, and its prequel 1923 with Harrison Ford. Plus, they own the rights to Nickelodeon with SpongeBob and other big networks and IPs like MTV, Comedy Central, BET, CBS. There's Star Trek, there's the Halo show, not to mention Sonic, Transformers, and a lot more. Plus, the company is profitable already and is still growing its sales by mid-single digit percentages in most years. But because the stock has crashed by so much, their valuation has actually fallen to a PEG ratio of less than 1, which is well below the sector median of around 1.5, and their dividend has also climbed to nearly 5%, which is very attractive. I do worry about the sustainability of that dividend though, because the company's profits have been heavily declining in recent years, which is showing that their business is kind of struggling. Free cash flow even turned negative last year. And I'm also worried about all the competition that they're facing from industry giants that are leaving the market extremely saturated. So at the end of the day, I would still feel more comfortable investing in video streaming through a more diversified giant company that is, more profitable and more stable, something like Disney, Amazon, or even Apple. And for that reason, I'll have to rank Paramount at the bottom here at number 3 because I think TSM and Activision are much safer and more reliable plays at this particular time. That will, however, leave us with the final stock of the list. Another stock here that Buffett has been buying, and not too much of a surprise here because it's one of his all-time favorites in Apple, ticker symbol AAPL, which he increased his position on just very slightly at only 0.04%, but because he already owns so much of the stock at over $116 billion, well, it was still a giant increase of over 333,000 shares, which just shows you how massively large Buffett's portfolio is. Hundreds of thousands of shares is not even a 1% increase in the position. That's just how big how much money he has there. Anyway, by the way, Apple has long been Buffett's number one largest holding, and there's good reason for that, as Apple is the largest company in the world by market cap, doing insane financials of around $400 billion in sales and $100 billion in profits per year, which is just insane to think about. And that's because their business is one of the stickiest in the world, where they've already reached over 2 billion active devices being used, which they continuously sell more and more services for over time at even higher margins, hence why they've gradually become more profitable over time, selling very expensive devices that are cheaply made in China, and then they tack on all these high margin services to make even more money on top of it. And that's why I've actually chosen to invest in the stock myself, because the business model is so strong for them. However, I only own a small amount of it because I don't really like how cyclical their business is, with actually a slight drop in sales expected this year and then less than 7% growth next year. And yet, despite that, the stock is actually trading fairly close to an all-time high and about 50% more expensive than the sector. However, I just know that the future of Apple is still going to be very bright because they're sitting on over $135 billion of current assets that, in combination with their giant profits, they not only use all of that money to pay a small but high growth dividend, but they also do gigantic stock buybacks at over $500 billion over the past decade alone. And on top of that, they can also use all that money to invest in new products and innovations for the future. And I have a big feeling that they're going to be releasing like a foldable and a flippable iPhone soon, similar to what Samsung does with the Galaxy line, that I think is probably going to usher in the next smartphone upgrade kind of super cycle for iPhones in particular, and I think that's going to give them a lot of new growth. Not to mention that they're also likely working on other innovations like an Apple Car and who knows what else. They're just sitting on so much cash at this point that they can enter practically any new market they want and expand their ecosystem of products and services even further. So even though I think TSM is more attractive from a current valuation and growth perspective, Apple is just a beast of a company that can fit very easily into anyone's portfolio, and for that reason, I gotta rank them as number one. So there you have it, guys. I'm putting Apple at number one for the best all-around stock there. I do own a small position of it myself. Then TSM at number two, which Buffett actually sold out of, and I personally disagree with his choice on that, but I do not own the stock yet myself. And then I put Activision at number three, which I understand why Buffett trimmed a little bit of it, but I think it's worth it as a small kind of speculative gamble. That's how I'm treating it. And then Paramount at number four at the bottom, which I actually do like them, but just a bit too risky for me personally. And I think there's better, more diversified options in video streaming, like I said, Disney, Amazon. I actually own those other stocks, so I don't own Paramount myself. But what do you guys think? Overall, I think all of these were actually pretty cool stocks, and I could see myself investing in pretty much any of these if I really wanted to. But do you agree with that? Do you like any of these stocks? Do you dislike any of them? I would love to hear your thoughts down below, and I'll respond to your comments as well, and we can have a nice little chat. But thank you for stopping by. Thank you for all the support, everyone. It means the world to me. And I will catch you in the next video, my friends. Take care, everybody. Bye-bye.